Hello. Accountants prepare balance sheet reconciliations as part of the month-end close process. We've talked about the balance sheet, but why do accountants need to reconcile the balance sheet accounts? The reason is that the balance sheet only shows you a balance for each account or category of accounts, but it doesn't really explain what the balance represents. For example, let's say the company has a balance sheet account called prepaid expenses with a balance of $1,155,000. As a reviewer of the balance sheet, how do you know that this balance is correct? What if entries were missed or incorrectly recorded? Even if you looked at the general ledger for this account, it would only show many debits and many credits in the balance, but it would not show you what the balance consists of. That is where the balance sheet reconciliation comes in. Balance sheet reconciliations are also an important internal control that protects the company against potential future adjustments from undetected mistakes. Most companies don't even close their books and publish their financial statements without the review of the most important balance sheet reconciliations. That means that the accountant not only records the journal entries, but reconciles the accounts at the same time during the month close period. In addition, companies have a review process for reconciliations where the accounting manager or director review and sign off on balance sheet reconciliations. The preparation and review of these reconciliations is also another level of protection against fraud. In addition, the balance sheet reconciliation is considered important documentation for the external auditors. This video is all about balance sheet reconciliations. But many companies prepare income statement reconciliations as well. However, typically not for all accounts. In my experience, I've tied out sales accounts to the invoice registers and intercompany cost of goods sold and sales, as well as the payroll-related accounts on the income statement to the payroll registers. Why? Typically, the auditors will ask for this information at year end. But that's a different topic. Let's take a look at a balance sheet account reconciliation. Balance sheet reconciliation can be prepared in a system like Blackline, a balance sheet reconciliation software program that receives general ledger data from the company's ERP system and helps prepare the reconciliations. It is able to automatically reconcile quite a few accounts without any preparer input. More common, though, based on my experience, especially in small and medium-sized companies, is that the accountant uses Microsoft Excel for the reconciliation. The Excel workbook for each reconciliation should have, at a minimum, a cover page, which you see here as one example, one or multiple tabs in the workbook that show the support for the account, one tab with the details of the general ledger and additional tabs related to the resolution of any reconciling items, if applicable. The format your company uses could look different, but should have similar information. The cover page example here shows the title of the document, balance sheet reconciliation, as well as the account number and description, followed on the third line by the date for which the reconciliation is prepared, typically the last day of the month. The account number here is number 102-600, which is a roll-up, meaning a summary of several different GL accounts, which we'll see in a little bit when we review the support tab for the general ledger. The next section lists the preparer and reviewers and the dates they signed off and email addresses. The purpose of the account should detail exactly that. What is the account used for? In this example, it shows the prepaid account tracks various prepaid expenses, such as rent, insurance, subscriptions, advertising, and trade show expenses. The prepaid expenses are amortized monthly. On the next line, the cover page shows the general ledger balance for this account. One tab in this workbook, in this example, tab A, should show the general ledger account details, such as the balance at the beginning of the month, the current month activity, and the closing balance. That allows the reviewer to first check that the general ledger balance is listed correctly by looking at that tab. When I reviewed reconciliations, I would also look at the final trial balance and double check that balance there. Why? Well, the accountant could have prepared the reconciliation on day 3 of the close, but then there was a late entry on day 5 that changed the general ledger balance. In fact, in the companies I worked for, we had a balance sheet reconciliation schedule that tracked the trial balance at least once each day and updated the amount the preparer of the reconciliation had previously entered as reconciled. In accounting, there are a lot of double and triple checks to make sure it's correct. On the next line of this cover page, the accountant would list the supporting subledger balances that show the same balance as the general ledger. Now, here's the complicated bit. Sometimes the ERP system will give you a report that shows that items A, B, and C combined equal the general ledger balance. That's called a system subledger report. Quite often, though, the system is not that sophisticated or set up for it, and the accountant must generate the subledger report on their own. So in the case of the prepaid expense account, you would have to prepare a support schedule that shows each item that was prepaid, that the date, the amount originally paid, for which period it was prepaid, and then the unamortized amount. Ideally, the difference between the general ledger and the subledger is 0. That's not always the case, though. For this account, you can see 5 lines that list the support for the prepaid accounts with the worksheet tab that shows the information. For instance, tab B shows the prepaid rent for $15,000. We'll go over the details scheduled shortly. Even when you have a system subledger report, it isn't always correct. And you will have to comb through the general ledger detail and subledger transactions to figure out why they're different. Sometimes the differences are small, a few pennies. And the company often has a policy that small differences don't need to be researched. You would still list them as reconciling items in this section. Let's now look at the additional tabs in the account reconciliation. This workbook has the cover page with the tab name of the account number and the description 102600 prepaid expenses. The next tab is tab A for the general ledger, followed by tabs B through F for the subledger support. So let's look at each of them. This is an example of a general ledger report. You would generate this GL report from the ERP system after the last journal entries for the period have been recorded. Some accounts like to prepare the reconciliation as soon as they've recorded their last entries to verify that everything they recorded results in a correct reconciliation, but there is a possibility that additional entries might still be recorded. If you're new to preparing the balance sheet reconciliations in your company, ask someone on your team what system reports you can use for the trial balance and the general ledger detail report. The ending balance on the general ledger detail report should agree with the account balance on the trial balance. That's an important double check that you're using the correct GL report. Your general ledger report should show the beginning balance of the account, the date transactions were posted, a description, debits, credits, and a balance. There's likely additional information on the general ledger detail report like there is on the example here, like department and entity. This general ledger report shows multiple accounts that all together make up a total of $1,155,000. At the top of the report, we have an account number 10610, prepaid rent with a beginning balance as of 11/1 of $15,000. There's no additional activity for the month. The next account is 10620, prepaid advertising, which shows a beginning balance of $497,400 and 2 transactions for the accounts entry for the monthly prepaid expenses for prepaid advertising. One line for radio advertising for $10,000 and the next line for television advertising for $200,000, followed by an ending balance of $287,400. Next, the prepaid insurance account 30, and the prepaid subscription account 10640 are listed. Both also have a beginning balance, monthly prepaid expense activity, and the ending balance. The last account, prepaid trade show expenses, 10660, that shows the beginning balance, which is also the ending balance since there's no activity for November. The total balance on this tab should be the general ledger balance shown on the cover page. The accountant should use linking formulas to automatically bring the ending balance from this page to the cover page. Some companies might prefer to show each of the general ledger accounts line by line on the cover page, whereas others show the total balance. Next, let's look at the support tabs. This worksheet, tab B for prepaid expenses rent, shows us the explanation. ABC Company paid $15,000 on September 1st for a new rent agreement on 123 Main Street with a start date of 1/1 of the next year. The amount of $15,000 is highlighted in yellow. I'm partial to highlighting the amounts in yellow because you can't help but focus on that amount. Of course, this amount should agree with the general ledger account detail balance. There's also an additional sentence in the notes section. Supporting invoice and wire details are saved in the rental agreement folder. Sometimes accounts paste an image here that quickly gives the reviewer the additional information they need to verify the accuracy. But often accounts will save the support in a folder and only list the link here on this page. As a reviewer, you would want to open the invoice and wire documentation in the rental agreement folder that is listed here. It might also be helpful if the link to the folder is listed here. In January of the next year, the account would debit the rent expense account and credit account 102610 for $15,000 because that is when the rent for January will be used up. Let's now move on to the next tab, tab C for prepaid advertising. The support schedule for prepaid advertising shows what accounts frequently prepare for long-term contracts that have to be recognized each month. On this schedule, we see 3 items for advertising: radio, television, and print advertising, the term of the agreement from 1 to 12 months, the amount originally paid, and the amortization schedule. That is what this is called when you spread the amount based on contract length over the applicable month and then the balance for the current month. For example, on the first line, we have radio advertising, which is for 1 year with the start date of June 1st and the amount that was paid of $120,000. The account shows $10,000 in each of the monthly columns from June of this year until May of the following year, and then the current balance as of November 30th, which is $60,000. The next line shows television advertising for 6 months, beginning July 1st, and an amount of $1,200,000 with monthly amortization of $200,000 and a current balance of $200,000, which represents the 1 remaining months for December of amortization. Last, we have print advertising for 1 month, beginning December 1st for $27,400. Combined, all current balances add up to $287,400, and of course, this should agree with the GL balance for this account. This is support tab D for the prepaid insurance, which is very similar to the schedule we looked at for prepaid advertising. Please pause the video to look at it longer. This is support tab E for the prepaid subscriptions, which is very similar to the schedule we looked at for prepaid advertising and prepaid insurance. Please pause the video to look at it longer. The last support tab is for the account 102660 prepaid trade show expenses. It lists 4 different trade shows for which the company has prepaid expenses. The account could prepare an amortization schedule here as well, but there are only 4 items that are going to be recognized, meaning credited out of this account at different months. The total for all prepaid trade show expenses is $717,100, which must agree with the general ledger balance in this account. In addition, there's a notes section where the preparer noted that the supporting invoices and wire details are saved in the trade show folder. The reviewer should review all the documents to ensure that the information is correct. Some additional things to consider are the frequency with which the balance sheet reconciliations are prepared. Not all balance sheet accounts are important enough to the company's financial statements to be prepared monthly or even before the financial statements are finalized. The same is true for the review of the balance sheet reconciliations. The company should spend enough time developing a materiality threshold that is used for reconciliations to determine monthly, quarterly, semi-annual, and annual reconciliations. A very critical element is the reconciliation tracker that is always updated for new accounts. The auditors will want to see this tracker as well to get comfortable that the internal controls around this process of reconciliations is tight. The account should be accurate, timely, and very diligent when it comes to the reconciliation of balance sheet accounts. I've worked for many companies and found that accountants want to always put their own spin on the formatting of balance sheet reconciliations, but that makes it difficult for the reviewer to quickly review and sign off on the reconciliations. It also makes it more difficult for the auditors. Another big topic in most large accounting teams is when you consider an account reconciled. What if you had a penny variance on an account? I would consider that reconciled. What if you had a $1,000 variance on a $50 million account? Is that immaterial? Having a consistent threshold for what is considered a reconciled account, perhaps with an amount and a percentage, is important. So to ensure consistency in terms of formatting and reconciling variances, I found that it is only possible to track if the reconciliations are scored regularly for the consistency of adhering to the format and the unreconciled or reconciled balances, and that the score of each regional accounting team is published. If you've prepared balance sheet reconciliations, what format do you use? What policies do you have in place? Please comment below.